Welcome to Urban Legend Crypto. We're here with our co-host, Brett Jennings, and to discuss a couple of very poignant topics. I'll let Brett go ahead and introduce him.
What's going on, everyone? Welcome to this fine Wednesday, the day after 4th. How was your 4th, Pedro?
My 4th was good, brother. I just hung out with the family and
shot some fireworks?
Yeah, lots of fireworks.
Legal fireworks, right?
Too many fireworks.
Well, that's what the 4th is about, you know. Now it's back to work time. So we had been discussing the last week or so kind of some things that have been going on with Bitcoin news or cryptocurrency news. And one of the things that we talked about was this article that came out. So we were talking last week about an article that came out in Forbes about asset tokenization. And it's basically $1 trillion market opportunity. And if anybody wants to know what asset tokenization is, it's essentially taking digital rights of ownership for something and putting it digital on a blockchain. So what they're saying is whether it comes down to cars or boats or homes, paintings, anything of value that you personally own, the transformation to have all of those rights stored digitally on a blockchain in a Web3 space is literally $1 trillion, if not multi-trillion dollar opportunity. So it's a huge world coming out there. Same thing with Web3 infrastructure. So I mentioned before, I'm speaking at the Breathe conference, which is an international Breathe conference here in Las Vegas in September. And it's literally an international Web3 for blockchain, cryptocurrency, metaverse, and everything in between. The infrastructure right now is being laid for Web3. That itself is $1 trillion dollar of opportunity as well. So lots of great things out there, and people I don't think are going to realize, but that's where everything's going to go, which is digital. It just makes sense. Put it on blockchain, you have proof of ownership, and you can facilitate it through a secondary market and not need any middleman to be able to execute that.
Can you give the viewers a little bit more on Web3?
So Web3, here's the best way that I can explain it. Web 1 was basically read-only format, whereas I can go online and I can bring up Time Magazine or People Magazine, Rolling Stone Magazine, whatever it is. I can go online, but all I can do is read. I can only read the format, that's it. Web 2 is what we currently have right now, which is not only is it read format, but now I can interact. I can have a blog, I can have social media, I can go on Twitter, I can literally interact with the web. I can run a business with the web. I can do all sorts of things where Web 1 was simply read-only format. However, the problem with Web 2, what we have right now, is almost everything is centralized. All of your data and my data is centralized. It's owned by maybe 3 or 4 or 5 companies. And they own all the data and they make money off the data. You don't own your own data. And what Web3 does is it basically gives the data back to yourself. You now become the owner of your own data. So it's basically a way for Web3 to me is people taking back the internet. And now instead of companies and Facebook and Google making money off our data and making money off of us, we now own our data, and now we can determine where we want our data to go and what's going to make money. But when we do make money, it's making money off our own data versus a third party.
Okay.
And everything in between. So digital being able to facilitate, it's basically a way to facilitate taking away the middleman in a sense. Same thing with Bitcoin and cryptocurrency, right? I no longer have to go through a bank to be able to transfer my money. Same thing. Everything in between, it really takes out the middleman and gives you ownership over everything. What do you think? What's it to you?
Ted Finkelman was on our podcast a while back, and he gave the best explanation that I've heard on Web3. And it's basically what you said. And in a nutshell, what he was saying is that now you have the ability to have ownership. And with this tokenization, that the Forbes article that you've just mentioned is basically coattailing off of is a trend that's been going on for the last few months now, probably about 8 months, where what they're doing is they're getting Satoshis, sats, and they're imprinting them with NFTs. And what they're doing there is they're minting those, and then they're selling those as novelty art or whatever use case they could come up with. And it is revolutionizing the way they're doing NFTs at the moment, right? So that, with the banks looking at it like Blockrock and JP Morgan and Goldman Sachs, they're saying, hey, wait a minute. If we can get this Bitcoin and there's 100 million Satoshis, then what we could do is get these sats and turn around and encrypt those with information that we can tokenize to give to either our customers or we can use to save. What the article turns around and discusses is that they're seeing that they could make over the next few years about 27 trillion, and the consumers can save incredible amounts of money as well through cross-border fees. And that brings me up with XRP. XRP is exactly that. That's exactly what they're doing. You're able to do on the cheap what the banks do on the expensive. So they can turn around and say that they're going to save in the short order billions of dollars in these settlement costs. But what technology are they going to use to save these settlement costs? And I keep thinking that either they're going to use a Ripple platform, if not, they're going to copy it so that they can save the money. What say you?
What I say to that is, here's what big companies actually do. Big companies, including banks, which is they wait for someone else to come up with the technology. Then they let that person spend their money, or that company spend their money testing it out, seeing what works and what doesn't work. And if it does work, then they come in and then they come in with their own money and just steamroll them and take the technology and make it their own. That's what they do. So, for example, I was watching an episode on Shark Tank, and this guy had some sort of, it was like a coat checking. And when you go into a restaurant, it automatically coat checked you thing, but it was like a system that was kind of online, but it was like an Uber thing in a sense. And basically Mark Cuban said, so here's what they're going to do is you came up with this idea and you've been testing it in different cities. So Uber is going to, or some company like Uber is going to wait for you to spend your money to test it out. They're going to wait for you to spend your time and money to see what works and what doesn't work. And then as soon as a tried and tested method does work, then they come in with their own money, form their own department, and steamroll you on that. So they very rarely come in. I mean, don't get me wrong. There are companies that will, Google or Microsoft or Facebook that will buy smaller companies. It's an extra appendage to their business that they're adding that is not worth them forming their own department to do. Does that make sense? Mm-hmm. So Facebook, if you invent some kind of cool little game, instead of Facebook saying we're going to go out and we're going to spend the money to start a gaming department and invest all the money doing that, we're just going to buy this little company and add it into our portfolio and add it into what Facebook is or whatever your company is that does. But if it's not something like that, if it's a direct competition, if it's something that is a game changer, when you're talking about technology like this, they are not going to let someone else, they're not going to use someone else's game-changing technology. They're going to wait to see what that game-changing technology is and what the success of it is. And once it's proven that it's successful, they're going to come in with their own money and they're going to create their own. And that's what they do. That's my opinion.
And as always, a good one.
I mean, that's not to say that I don't think Ripple technology is absolutely amazing. and that ripple still won't have its place. It's like Bitcoin. I think that no matter if you make Bitcoin illegal or you try to ban it or shut it down or make it next to impossible to use and buy, I think that Bitcoin is always going to have a market for itself, regardless.
My opinion is that they're going to buy as much as they can of XRP while this whole thing's playing out. And then they'll figure out a way to take it over. Okay. Whether it be through a bankruptcy proceedings like JP Morgan Chase did with Silvergate Bank to pick up Sin. Okay. It will be some play where they could either buy as many XRP as possible, or they can turn around and make a play to pick it up on the cheap in some kind of proceedings, or they can just figure out how to copy the technology, right? Now, that being said, going back to Web3, in that same Forbes article, you've got Hamilton Lane, a colossal investment management firm, oversees $824 billion in assets, has introduced a tokenized fund on Polygon Matic blockchain. The tokenization version of the feeder fund drastically decreases the minimum investment required from the conventional $5 million to mere $20,000 for a tokenization feeder fund. The expanded accessibility opens up opportunities in private markets for more diverse ranges of investments. Now, that's a little reference, about 4, 5, 6 sentences for a bigger outcome. All right. So what they're saying here is meaty. In other words, if you go on and you start realizing that Polygon had on October 24th, 2022, won a big investor, and that was Newman Bank, a Brazilian fintech company backed by Warren Buffett. See, Warren Buffett indirectly through this Newman Bank is getting in through the back door with this type of tokenization that is basically being done on the Matic chain. Okay, so if you go back and you look at this Forbes magazine, you're seeing that the Legos are starting to play out. If you read through it, you see people like Blockrock, you see JP Morgan, you see Apollo, Mellon Bank of New York, the Carlyle Group, Morgan Stanley, State Street. I mean, all of these guys, UBS, are
all members of a blockchain consortium.
Yeah. And so you got to ask yourself a question. And the question is, why are these traditional companies getting involved with Web3 technology if they haven't already done the homework to see if these technologies are going to pay out in huge quantities to them based on the investment that they're putting down? So what they're seeing with these technologies is, in my opinion, the future. They're looking at Bitcoin. They're seeing the possibilities of doing something with these sats to build on top of them to create the Web3 platform in a way that will benefit them. Now, the question is, what is that way? What is the benefit? What are they going to do? What do you say?
Well, no doubt the technology works. I mean, and that's what I'm talking about is people can say what they want about Bitcoin and cryptocurrency, but blockchain in itself, the technology, you can't deny. It's safer, it's more secure, 100% transparent, and the way that you can facilitate it is absolutely amazing. You don't need that middleman. All these banks and these major hedge funds, guess what they use in their business every day? Middlemen. You don't think that they want to get rid of a lot of middlemen in their business because it saves them more money. and it makes their transactions a lot easier. So they very much understand the technology of blockchain. And what did that say in that one article? That because of them being able to digitalize their assets and tokenize them on the blockchain, what before required a minimum $5 million investment with that company, you can now get in for $20,000. That's what blockchain does.
All right. One of the other ones that I caught my eye was Figure Technology, Inc., and a leader in transforming financial services through blockchain technology, completed HELOC home equity lines of credit, securing underwritings by Jeffrey, Goldman Sachs, JP Morgan. These initiatives enable Figure to secure additional liquidity in capital markets, offering homeowners flexible and affordable access to home equity lines. Well, I mean, here they're saying, guys, that there's already a company set up that is going to help these banks use blockchain to do equity lines of credit, which, if you think about it, these people that are not selling their homes right now because they've got these low interest rates, they're sitting on top of massive amounts of equity. They're trying to figure out how to tap that equity so that they can go forward. The problem with these, from what I can tell, is that they're saying to themselves that, well, if they can get this equity out through a blockchain on a HELOC to the people, they can continue with this economy that they've built. Think about it. Without housing being sold, then a lot of companies are going to suffer. But if they could come up with a way to build in these HELOCs that they could take out equity so they could keep the ball rolling, the debt cycle rolling, then what ends up happening is that the economy will continue to flow.
So when you're talking about Figure Technologies, that's an example right there, which is you're doing a loan or some form of lending on blockchain. So again, what you're doing is you're taking out the middleman and all the processes in that to happen. So to qualify for a HELOC loan, there's a certain standard of criteria that you need to have that the bank has for you to meet in order to qualify for a HELOC loan, right? Mm-hmm. All of those conditions and requirements of what need to be met to qualify for one can be put into a smart contract. So that once you start that smart contract, it self-automates itself. So the qualifications that you need and the legality of everything is still there. And all the work that's needed to make that happen is still there, but it's hidden on the back end. So the consumer experience is they use a company like this, they're able to tap into that equity in their home with literally a few pushes of the button. That's it. And then it's all stored on blockchain for transparency and safety for everything else. You know, that's what that does to me, which is blockchain. It's same thing with DeFi, decentralized financing. You still need to qualify for a loan, and all the conditions and stipulations and requirements needed to qualify for a loan and all the paperwork needed to qualify for a loan and all that stuff is still there, but it's hidden on the back end. So that the user experience is, instead of sitting down with a loan officer and having to go in and meet with them and bring in this paperwork, and then you got to wait for somebody at their loan office to do their job and get that paperwork over. Then they 24 hours to hear back from this person, and then we can go to the next step because we got to hear back from this person. We got to clear it through this department. All that can be wiped out. It's still there, but the customer experience is it's literally a few clicks and you have that HELOC loan or you have that home loan. That's what DeFi does.
In that same article, you've got Franklin Templeton, a prominent asset manager with $1.5 trillion in assets, has unveiled a mutual fund that utilizes a public blockchain transaction processing and recording shares ownership on a decentralized cloud-based ledger rather than a spreadsheet, without the need for daily human settlement, particularly during the redemption process. The fund opens up 24/7, 365-day trading. The orders can settle in real time or at a predetermined time daily that's automated through the ledger. Apollo, BlackRock, Blackstone, BNY, Mellon, Carlyle, Morgan, State Street, UBS, and all members of a blockchain consortium focus on alternative investments. It is noteworthy that nearly all members already have significant blockchain-related initiatives. The global asset market is undergoing a transformation through the blockchain asset tokenization, creating unprecedented financial and investment opportunities. It unlocks access to liquid assets, enables secure fractionalization asset ownership, enhances ownership mobility, improves transactional and operational efficiencies, and more. The staggering notion value of assets amounting to hundreds of trillions of dollars outside the traditional financial system, coupled with the anticipation of economic benefit. It is enticing major institutions to blockchain experimentation. Moreover, this paradigm shift presents exciting opportunities for asset owners to attain superior overall returns. Oh my Lanta.
That's what I'm saying. It's what blockchain does. It's the same thing with tokenization of a real estate property. You're literally taking the building that exists right now. You're not changing anything about it. And all you're doing is taking the value of it and you're digitalizing it. And you're dividing it into smaller tokens or fractions. And each one of those have digital property rights. Each token has digital property rights. So now you've got a $100 million apartment building where before you could only have a minimum, you had to be an accredited investor, which is a minimum $150,000, $250,000 just to invest in this $100 million apartment building. But now I take my $250,000, I invest it in this $100 million apartment building, but per the agreement, I'm locked into it for, say, 5 years. What if 2 years from now, I'm sitting there and I'm like, man, the real estate market's going to crash. You're stuck holding it. That's just the way it is. But now you can take that $100 million apartment building and you can break it up into, say, 1 million different shares. So now you've got $1,000 per, so you break it up into 1 million different tokens, 1 million digitalized tokens. So now each token is worth $1,000. It represents $1,000 in value. But now that $100 million apartment building can now be worth $300, $400, $500 million because you've opened up the liquidity for it 3 to 4 or 5 times by simply opening it up to a world market. You don't need $250,000 to invest anymore. Now you only need $1,000. And now I have 3 different investment portfolios that I invest in, and I've spent a total of $10,000. I am free at any given time to sell this token or that token and transfer it over here or do whatever I want to do. But with traditional, you need an X amount of money and you're locked into it. So it's a win-win for everybody. I mean, how, if you think about that. Hey, this is a simple dumbed down version, but let's say I have a house that's worth $500,000. And now I tokenize that. And now that house, all I did was take the value of my house and I switched it to digital ownership. You can literally increase that value of anything. Why would you not? I don't have to add on to my building. I don't have to update. I don't have to buy more land. I don't have to do anything. All I simply have to do is transform my shares or transform the value digitally onto a blockchain. That's it.
That is of interest as well. It says non-blockchain tokenization. It is used to safeguard data to substitute sensitive data with random tokens that hold no inherent meaning by explorable value. These tokens act as reference to identifiers, facilitating the mapping back to the original sensitive data using tokenization systems. This method is widely used to secure diverse types of sensitive data, including financial transactions, health records, criminal histories, vehicle driver details, loan documents, stock trading, voter registrations, and more. Well, talking about non-blockchain tokenization, imagine having a situation that now the blockchain is being used to store your personal information. And think about it this way. You want to look at Orwellian uses of these non-blockchain tokenization. So imagine if they get a bunch of sats, right? And they use them to imprint all of the personal data of every citizen in the United States, right? That's 2 Bitcoin, right? 3 Bitcoin, whatever. And what they do is on every one of those Satoshi, they put in your criminal, driver, and voting, along with any kind of loan records that you may possibly have, coupled with all of the phone data that they have with these towers, coupled with this face recognition technology installed in drones with predictive capability software through new AI systems that are coming. You want to talk about, that is like an enslavement in its totality of the human population. Think about that. There was a Tom Cruise movie, I don't know if you remember it, where they used to be able to predict if you're going to...
Minority Report.
Right. So, good job.
Thank you very much.
Minority Report shows a police force of the future predicting an outcome, okay? And they have these guys that are like some kind of psychic linked together through a supercomputer. But what kind of scenario do we have here with that?
So I think there's inherent danger to non-blockchain tokenization. What they're basically saying is, on one hand, I understand a good use case of it, which is that is a great way. So basically, non-blockchain tokenization is referencing identifiers or facilitating the mapping back to an original sense of data using as a tokenization system. So it's basically an identifier. It's a way to trace back what information is true and what information is not true. So the inherent danger, I believe, is with non-blockchain tokenization. Non-blockchain tokenization is primarily used for things like health records, loans, criminal history, all sorts of very, very personal data. Now, they're supposed to be used as personal identify points, which as the more we can trace it back, the more we can identify who you are and your information. But how is that not going to be used by governments? I mean, if we think the CBDCs are bad, you combine CBDCs with this stuff, and I'm telling you, their government is going to have 100% control over you. I mean, I've already said before that NSA created SHA-256, and a lot of people in my post think I'm crazy, government doesn't have a back door on this and that, but ultimately, where did the internet come from? I should say this, the internet was allowed to exist because of the government. SHA-256, all these things that are behind it. This is the ultimate totalitarianism that we could have. I mean, think about this. They now have access at any given time to your health records, your driver's license, your criminal history, your lending score, your taxes, every single thing that you are comprised of statistically and data-wise as a human being to facilitate around this world, the government will be able to absolutely control if they wanted to. So non-blockchain tokenization to me is a warning system, and it's a heed to really understand what's going to be going down if we let it to. Humans control good, humans control bad. It's like the internet right now. The internet's used for good, and the internet's used for bad. So I can see how if you're looking to find out truthful news pieces or truthful articles of what's facts and not what's not a fact on the internet, I can see where those identifiers will work. But ultimately, what are the governments going to do knowing that they can, knowing that they have access to? If the government even thinks for a second that they can, I guarantee they will. That's what the government does.
Brett, what I see is hashtag function that was developed by IBM and help facilitate what later to become, with the technology created by Satoshi, to come up with the Bitcoin in the end. And the idea was to combat the fiat system that has crashed and burned throughout all of history. But when you look at the outcomes that may come with this, combined with supercomputers that will allow for a system that will have all your information in the head of a pin, pretty much, and will be able to be accessed by governments to use to predict behavior, I think that we're heading again to an Orwellian system that will be total control. If you look at what's going on right now, Brett, in the last 72 hours, you've had two major egg plant factories. Basically, the eggs are processing factories. The two largest in the country have burnt down. If you look at a bunch of other refineries that have also gone down over this year, if you look at the oil cartels starting to reduce all of the oil that's being supplied to try to increase their profit, corporations in general are looking to create a scenario where they can maximize their profit through a system that, so if you look at scarcity right now in the food supply, the potential could be terrible is for inflation and the whole bit, okay? We're looking at a worldwide shortage of basic necessities if we keep having these plants being burnt to the ground. And it's not one, it's in the hundreds right now. And I am worried because if you mix that with our problems with inflation, then we're looking at a very, very bad outcome for all of us.
So you're absolutely right. I just read an article. In fact, it's right here in front of me. In 2022, there were over 20 food facilities that were burned. I don't remember food facilities burning. Do you? And we're talking about major farms for eggs, chickens, livestock, cattle, whatever it is, everything in between. So do you see these big farms burning that are holding just grain? No, they always happen to be livestock or eggs or something to do with that. Combine that with people like Bill Gates buying up thousands and thousands and thousands and thousands of land so he can't farm on it. I mean, it's no secret Bill Gates doesn't want farming to happen. If you look at, I believe it was Sweden or one of the countries there where they basically are going to fine you, or they're basically making it impossible for you to keep on farming. They're saying that it's bad for the environment, and in no shape or form will you get any reward for farming. All the breaks that you're going to get, the tax breaks and everything else, it's basically set up to get you out of farming. So here's the question. When all these farms are gone, what are we going to do? They just want to grow our food in the lab, which I guess the idea sounds all right, but do you want to be eating food in a lab? Like, there's some things that need to be natural, right? Like a tanning bed may work, but is it as good as natural sunlight?
Lab-grown chicken meat is getting closer to restaurant menus and store shelves. All right, and it's an article that by ABC News that basically talks about they're growing chicken breasts and chicken meat in a tube.
You want to hear something even crazier? I just posted an article on my Facebook page about they're growing fish through a 3D printer.
Really?
Yeah, literally, they created the fish or shrimp, something like that, through a 3D printer, and they ate it, and it's real. They created their food through a 3D printer.
How the heck you do that?
Read the article. It's on my Facebook page.
Because the ink is not really edible, or whatever.
It's not ink. It's not a print. Like it's the same thing of how do they make
they do it with tofu or something?
Like there's 3D printed homes that they can make or 3D printed guns. They're not printing out ink. So if you look at how they do like a 3D printer, like for instance for a house, all it is it's set up and the dimensions for the wall and all that stuff is it keeps on coming back and forth and filling it in like
paste.
This. Yes, like a paste.
Oh, so it's probably like tofu or something like that.
Yes.
Okay.
Correct. So they're not. It's not ink. So it's not a 3D printer in the sense of a printer like you think.
Yeah.
But it's like literally you put in the program for it, and it creates and prints out food, and you're able to eat it and get your calories and nutrition and all that stuff.
Yeah, well,
crazy.
That would make sense. So, in other words, you can produce what tastes like fish, right?
Yeah.
I mean, look, I'm a Star Trek fan, so I really like Star Trek. I used to think it was kind of cool. They used to go and they could tell the computer what they wanted to eat, and they'd just come right up. And that is exactly how they probably did it. It's not like they got a fish. They just got a paste. They did the seasoning to make it taste like it is, but it's really not a piece of fish. Well, here
it's like 3D printed guns. Mm-hmm. It's not metal, but it's not printer ink.
Right. No, I get that.
Yeah, it's plastic.
It makes sense. Okay.
That's how they did it. That's
I'm
why
used to hearing the word printer and associating it with something else. But here's, regulations from U.S. Department of Agriculture are now deciding how to label cultivated meat for public safe and inspection facilities that produce it. The guidelines are expected sometime this year. So, I mean, think about that. Here, they want you to eat this designer food made from bugs, right? Yeah, I see it. And then they want you to make, chicken out of a lab, right? I mean, and then all of a sudden, all of these food refineries are being burnt to the ground that actually produce real eggs, real chicken, real beef, and vegetables.
Again, they will control your food too.
Right.
That's the ultimate goal, if you ask me. I mean, I guess call me a conspiracy theorist, a crackpot, whatever you will. It doesn't matter to me. But you're talking about combination of CBDCs. You're talking about a combination of the non-blockchain tokens. You're talking about a combination of taking away your food supply. What about homes? This is the new norm for home prices. BlackRock and these other hedge funds are going directly to builders, Lennar, Pulte Homes, and having them build 1,500, 2,000 home communities just to rent out and selling them directly to these hedge funds. So these hedge funds can rent out these homes. They don't want you to own anything. You will rent and you will be happy. So combine all these things put together, and I'm telling you, we need to watch out.
I think what you're referring to is what the WEF, WEF, right?
Yep.
The WEF has come up with as a game plan for us as humans to leave a lower footprint. What is it? A carbon footprint?
Carbon footprint. Yeah. They want us to all be one. That's the thing. They want us to all be one. But humans, by nature, we need to do things as a group, and we need other humans, don't get me wrong. But humans by nature are individuals. And if we lose our individuality, we are screwed. The world, society as a whole is screwed. So I understand everybody getting along and everybody sharing a similar experience. But life and the world is not fair. period. We didn't set that up. That's the world that was set up for us.
I think you're alluding to a two-class system. Those that have and those that have not.
We already have it.
The ones that have are going to control what the have-nots get to eat. And from what it looks like, they want us to eat bugs and lab-grown.
So a world of have and
sludge.
have-nots. What's changed?
Yeah. So they're going to own, like Bill Gates is going to own all the farmland, right? They're going to grow themselves the best of the best, keep you healthy, and we're going to be sick, relying on pharmaceuticals.
It's like these politicians like Gavin Newsom who said that you need to stay home because of COVID, and then they're off traveling.
Right. On their jets.
It's on their jets.
On their jets.
Leaving their carbon footprint
Like
while
good
they're
old
on their way.
Al
While they're
Gore.
on their way to an environmental summit, they take their private jet.
Yeah,
exactly.
Like Al Gore will go like 50 plane trips or whatever.
Listen,
a
Pedro,
year.
not for me, for you.
Right.
At the end of the day, it's humans' job to make the world better and to make the world fair. I'm not saying it's our responsibility, but it's our job. It's a steward of being a human being to make the world a better place than when we left. But at the end of the day, God still makes humans the way that he makes humans. And until humans quit being born the way that we are, with greed and lust and all these other seven deadly sins or whatever you want to do, the things that get us the most, humans are capable of immensely great things, and humans are capable of extremely bad things. Right? So until we're not being made that way anymore, it's going to be a little bit of the same old every single time. The best that we can do is try to make it a little bit more fair and a little bit better before we go out.
Yeah, I think we're screwed.
Probably.
On that note, we'll end the podcast. All right.
Here's the doomsday.
Yeah.